Welcome to the Super Session. I'm Peter Switzer. I'm joined by my colleague Paul Rickard, and we're both concerned about the hype we're seeing at the moment around a housing price bubble. Now, Paul, how worried should people be about this?
Well, it is a lot of hype, Peter, isn't it?
I
And
think so.
they love the word bubble.
The bubble, yes. I'm actually calling Christopher Joy from the AFR the bubble boy.
The
He's
bubble
talking
boy.
about it so much.
Look, I think I'm not that worried. I think, as we've talked about in the Switzer Super Report, we're in we're in a bull market in property, particularly in Sydney, to a lesser extent in Melbourne, and maybe the other states have got to pick up still. So, we've seen most of the action here in the Sydney market, more so in the last 3 months. Melbourne just appears to be sort of having turned the corner. I think we're about 1 year through of probably a 3 to 4 year bull market in property. The data doesn't suggest, a bubble implies two things. It implies, first of all, that prices have gone through the roof. Well, they haven't.
No.
They are accelerating,
Yep.
but they're certainly, on an average annual, year-to-date average across Australia, it's more like about 6%. And Sydney's only about 9%, 9 or 10% over the years. So, and that's coming off some lean times. So we are getting acceleration, but they're not going through the roof. And then the second thing that, if you think about a bubble, is, well, what would prick the bubble? If it's going to be, something's going to go up, there's got to be some reason or something that causes to burst it. And I look around and I just can't see the factors. So, so to me, there seems like there could be three things I could think of that might cause, a bubble to come crashing down. One would be interest rates going up.
Yep. Can't see that happening in the short term.
Pretty hard to see inflation really picking up, and pretty hard to see much change in interest rates. They might have go up a notch or two, but we're such historically low levels. Big figures, 4s and early 5s are common out there. They're not going to go up too much. So
the Reserve Bank is they might actually tweak interest rates a little bit, and that will probably control the size of the bubble if it exists. Yep.
So the other thing that sort of comes to mind is, a big increase in unemployment. Now, unemployment and underemployment have been edging up, but it's hard to think that the economy is really going to go into a lot more trouble.
No, I can't see that. My economic crystal ball says the economy is going to get better in 2014, so I'm not worried about that. So we're going to rule that one out.
And then thirdly is what would normally happen in any market. There's two parts to a market: one's supply, one's demand.
Yep.
Right? At the moment, it's a demand-driven market,
Yep.
and that's why prices are going up. Clearance rates are a lot stronger. Time on market has dropped. So where does the supply come from? Okay, obviously, in a net sense, it's got to be new construction, new buildings, new properties, new developments. And if you look at the figures coming out from APRA on bank lending, this is lending to the banks are doing for construction of residential apartments, major land development or subdivision. Bank lending in that area is still running at about half of what it was in 2004 and really shows very little growth over the last 12 months. So there's no imminent massive new supply.
Do you think some of the people talking about the bubble are actually trying to scare the Reserve Bank out of cutting interest rates anymore because they might think, well, they need the dollar to be lower, and we do need the lower dollar, but the Reserve Bank is being warned, if you do this, you might create a housing bubble?
Look, I think there's a bit of an agenda there for that. It's also, I think, in the environment we live in, bad news sells. And a lot of people, in the last 5 years have been preaching doom and gloom and continue to do so. So as soon as you're seeing a little bit of price movement upwards, it's automatically a bubble. And I think there's a bit of that. There is international research that says that, and an argument can be made that, Australian house prices are high by global standards. There are various ratios around things like the house price to household debt and income, various servicing ratios that make our market look high. There are various other graphs people trot out about real house prices over 150 years and show how it's gone like that in the last 20 years. I think that's all interesting, but it's not particularly relevant to what I just see as being a normal bull market. And that doesn't mean we won't get carried away.
No.
Most markets overdo it.
And probably what will happen is, you and I think the stock market's got at least 2 years, it could end up being 3, and the house prices will probably go up around the same time as people feel confident, and eventually the stock market will go off the boil and house prices will go off the boil.
Yeah. And I think a lot of the warnings by the regulators, people like APRA, are what they're supposed to do. And in the Reserve Bank, they're supposed to make sure the banks are being extra prudent and they don't get caught into a situation, such as happened in, particularly post-GFC in the US or the UK, where they had the exposure to housing was flawed. So their job as a regulator is to make sure the banks are keeping high standards, they're not getting carried away, and as more the prices go up, perhaps the more prudent the bank needs to become on how it lends money.
Okay, so the bottom line is don't get too spooked about the housing bubble hype.
I can't get, not at the moment. Yeah, when people are queuing up to buy Gold Coast property,
Yes.
or you're seeing, apartments going up everywhere, I don't know what the equivalent of the commercial crane is in the residential space, but I think when you start to see those signs, then there's a bubble, but we're not there yet.
And the Switzer Super Report will tell you when we think there's a bubble happening. Paul, thanks for joining us.
Thanks, Peter.
That's a super session again.